Good morning. Sorry, now something here to till next recover. So, shall I introduce myself? My name is Prabhat Singh. I have a basic degree in human resource management at University of Galle. I'm a member of the Sri Lanka and a member of AD Sri Lanka, member of the CNA Sri Lanka, and I'm fellow member of the Chartered Institute of Taxation Sri Lanka. And I have an MBA taxation, the only taxation MBA in Sri Lanka offered by PIM Sri Government. So currently I am working on leading a manufacturing company in Sri Lanka in the tax future. I'm overlooking the Sri Lankan tax operation as well as international tax operation. So which has few, we are having few manufacturing location in Sri Lanka as well as overseas. Right. So basically, in this discussion, so I'm doing some lectures, not some lectures. I'm doing lectures for Sri Lanka strategic level as well as AAT final. Right. So why I introduce myself to you have some sort of confidence that the knowledge and the experience that I need to share with you. But there is no any other agenda for that one. So in your side, I mean normally I'm not doing lecture just like A-level lecture. Now you are in a journey where you will then with some sort of the expectation maybe your ultimate objective may be or your vision may be not just complete this exam, right, and have that graduation. Obviously, maybe you want to do another level of your career path or get in the going to the upper ladder of your corporate ladder, right? Therefore, so in your side, you have, say, in my side, I have 50% responsibility to deliver in the lecture, and you also have 50% responsibility to get what you are expecting from me, right? So therefore, it will be a partner in learning result. That means you have to participate. So you know that evaluation method followed by the September, right? So yeah, of course, I don't think that explanation thing and all those things you are very familiar. I need not to explain, but I will explain how the basic function of my expectation answer because compared to the professional level exam, is little different the academic level exam, but I expect the same professional level from your side also. Right? You have that commitment, you have that responsibility. Complete this program in very successful manner. Right? So therefore, another thing what I want to highlight, so I can finish all the theory part with practical application with my equipment. Right? But in your side, when I'm doing some say part of lesson, so I'm not telling everything. I'm not telling 100% thing what I know. Thing is that you also contribute to that lecture with your current level of knowledge. Right? With that understanding, we'll start our lesson till because I have the tutorial. With that understanding, we'll start the lesson. So you have, I mean, the basic understanding of the taxation. Right? The previous level we covered taxation, that theory part plus the application, which is relevant to especially individual taxation. Am I right? Right. So in this course, but the pillar or the drive is to get your knowledge sharpened in regard to corporate taxation as well as international taxation, right? Especially how the tax is applicable in terms of the cross-border transaction, So that will be one main part, but I am covering it. Right? So if I ask simple question, what do you mean by tax?
The government's way of raising money, funds.
Raising money. So that is only it's the way of raising money. What do you think? Yes, whatever answer.
It's a way that a citizen would show his responsibility towards the government.
Especially last couple of years, it is the most popular word in Sri Lankan context as well as international context, right? Because with that on the post-COVID impact and because of the equation, most of government rely only on the tax revenue. In the fiscal policy, which the main part is they give the priority for the taxes. I mean, obviously, I pay. You pay that. You. So then, what do you mean by that?
It is kind of like a contribution that we give to the government in terms of like the services they are providing.
Now it's provided by the government.
Yeah.
For the compensation of the rewards for the services, our contribution is tax.
Yeah, not partial.
Because actually it will be down to at the first level, but I thought of that. Government need money in our country. So therefore they are imposing taxes. Yeah, so the definition of tax is not that, because what you told here is why the government is imposing import taxes. Right? Right? Tax is something like, yes, obviously imposed by the government, though the political arm which has the sole authority to impose tax. Say tomorrow they can increase the tax, say at 40%. In Sri Lanka, we have the maximum tax rate is 40%, which is imposed on the manufacturing and distribution of liquor, tobacco, that type of thing, or betting, gaming, and that type of business, right? That is the maximum tax rate in Sri Lanka, right? So the sole authority or that unfettered or that authority is with the government body. Government or the political bureaucracy that they can impose taxes. Right? That's what happened in 2019. Government has reduced their tax. In case of the individual tax rate, they reduced to 18%. Again, they have raised that maximum tax rate to 36%. So government means ultimately who? Members of government, they are members of the parliament, they are passing laws, right? They are ratifying the laws. So that means members of parliament means we nominated them. So ultimately, who increase the taxes? Is that parliament? Then we increase the taxes, right? So it is a contribution, yes, of course, to whatever services provided by the government, as well as it is there are, as you mentioned, the first The main objective is raising funds for the meet up government expenditure in terms of capital nature as well as in revenue nature. Right? So, I mean, current context, in our government, we don't have much capital expenditure to lead up day-to-day or the recurrent expenditure. We use that money. It is collected from people as taxes. Right? So, not only that objective, that is the main objective to raise funds by any government. Not in Sri Lanka, in terms of the country as well. So other main objective, other objective is to direct the economy. Right? Direct the economy. So which type of economy, which type of activity we should encourage or which type of activity we should discourage? Economic activity. So in that aspect also government impose taxes. Right? Other aspect is social objective. We have social objective. As you mentioned that we need to look after some category of people outside, and we have to. There is a responsibility to make our society very civilized. So tax also can use in that tax. I mentioned that earlier that there is 40% tax rate on liquor and tobacco. Right? There is a high tax rate in case of the individual. In case of the individual, 36% is the maximum tax rate, and it goes on 6% to 30%, 6%. Right? So, to give some sort of fairness, and you know that distribution of income, there is some. That is the problem that we learned from A level to up to now. So there is a disparity on that one. Manage that. Government impose tax. Right? So having said that, that is the definition for taxation as well as what is that objective of imposition of taxes. So this is the tax act. Currently, we are current tax act which is in Sri Lanka, Act number 24 of 2017. So I am using this one. This is consolidated act, and I mean that this is not the original act ratified by Parliament. Thereafter, there are so many amendments in each year in Sri Lanka. Amendment coming for all taxes. So it is incorporated to this act. I will share this act with you. The soft note of this act. So you can refer that because my one intention is to you should get on this thing. You should have that some understanding how we should use tax law. Tax law. We more refer tax law, right? And what are the components of tax law? So therefore, my request is to get familiar with how you should read tax law, and thereafter the application of tax law. Using which is we to some extent we learn the tax law, right? So any act, section 2 is the charging section. Section 2 say what is the tax, right? It gives some sort of introduction. What's the tax? Who is liable for that, and what for what period, right? In this Revenue Act it says, if I read for you, because I don't forget that one, read for you. Income tax shall be payable for each year of assessment. Income tax shall be paid for, shall be payable for each year of assessment, right? By it, a person who has taxable income for the year So these things we have already covered, and this is the area. So tax law comprises Act, gather notifications are not the law, but it is the implementation part of Act. Right? Example: who shall be the authorized person? Act says authorized person. Right? Authorized person. Thereafter, gather notification says the definition of authorized person. Who will be included there, right? And circulars issued by the tax authority. And because, as I mentioned, tax is imposed by the Parliament, it is executed by the tax authority. In Sri Lanka, there are main four tax authorities. One thing is the Department of Inland Revenue, so the Inland Revenue Department, Sri Lanka Customs, Excise Department, and Provincial Council. Tax Revenue Authority, that's Provincial Council. So they execute the law. They are not the person who is imposing taxes. They do administrative part of the law, right? So circulars issued by some that administrative part, right? For the smooth function of tax, what the government is imposing. Thereafter, case laws. Case laws means you know that it is not practical way to incorporate every scenario to any act or the law, right? Therefore, there may be some sort of interpretation issues. For that thing, people can, or the taxpayer can seek the interpretation from the court, right? So the proceedings given by the court subsequently can be applied if the facts are very simple. right? So case law also part of law. Thereafter ruling. Actually, the ruling can be also issued by the court system, not the tax authority, but in Sri Lanka, we have separate ruling committee in Inland Revenue Department, where they can interpret and they can give ruling. In the act also accept that they can issue two types of ruling. One thing is public, other thing is private. We learn the administrative part of law. So this is the area what we are discussing. So charging section is there. Who shall be liable for income? Right? Tax on income. Who shall be? It says person who has taxable income. Person who has taxable income. I will share this same presentation in your lecture. Right? So, for what period? It says year of estimate. I am confident that you have learned this thing, right? But I refresh your knowledge. Right? So, because these are cornerstones of the law, otherwise we cannot move forward. Because you should have good knowledge on the charging section. Okay. So, person who has taxable income for that year means year of estimate. Other one is person who receives the final withholding payment. Person who receive final withholding payment. So today or not, there are only two persons who is liable for Sri Lanka income tax. You can explain. First one who has taxable income. Second person who receives final withholding payment. Right? Final withholding payment. So then who is liable for Sri Lanka income tax? Only two persons. First one is who is having taxable income. Second person who receive final withholding payment. So we learned that what is final withholding payment. Right? Do you have any understanding about the withholding tax? You share your knowledge with me. Okay, tell me what is withholding tax? So who are working currently? You are working. All of you. Employee? Yeah, dividend, yeah. When we are making dividend payment, yes, withholding tax, yeah, correct. So anybody who is saying bank account, saving account? No. No. That rather in the Potigal, no, you don't have that fixed student saving account or everything. No, all money with you is in tax in field, right? You put it in the field, right? So check with your saving account. In they are paying interest. The payment of interest, there is another column. It says WST or whatever. That is called withholding tax. Right? Withholding tax means, so simple explanation for the withholding tax. Why they withhold, they hold tax at the time of payment. They hold tax at the time of payment. We call it a withholding tax. Somebody is holding, we don't know. So who can hold at the time of payment? Then it should be the payer. Payer can hold the tax at the time of payment. So that is withholding. But here it says final withholding. The important point is here final withholding. We don't know what is final withholding, right? But it's kind of withholding tax, right? In Sri Lanka, the older tax payment, the very old system is the withholding tax system is payee. You may heard that word. Right now, it is not called as payee. It is called as name as API. Advanced personal income tax. You may learn that concept also at the first level, right? Right. So during that year, accordingly, a person is chargeable with income tax when such person has taxable income or receives final withholding payment. The period of tax is identified as year of estimate. So for which period we are working out the tax liability? It's not for a month, not for a 6 month or quarter. It is for year of assessment, not year. It is for year of assessment. the tax, it is year of assessment. Right? So you know that financial statement also prepared for a year of a year. And we start from this year we are working to the financial statement. April 1st to March 31st. Is that the case always? I don't know, I'm asking from you.
No.
No. Can we prepare for another period? Yeah, we can prepare for any period. It could be monthly, it could be quarterly, it could be 6 months, 18 months, 12 months. And we can prepare financial statement in case, but we have to make a disclosure. That's the thing, right? But for tax, that's not 2-3 periods. It should be always year of assessment. Even we are having income only for 1 month. We work out the tax liability for a year of assessment. Right? Okay. So I think now you can explain the charging section. Right? So we don't know. Yeah, year of assessment. I didn't give the interpretation of what is interpretation for year of assessment versus taxable income, final installment pay. Right? Right. Interesting thing is this acts as another section. It's called section 195, section 195. That section gives some interpretation. Right? I told you. The case law, the legal system can interpret the law, right? Interpretation. So, how the law is interpret the law? I mean, any word or whatever thing. Or so this is real case scenario. So what I say. So what is motivation? Give me interpretation for motivation.
Mode of transportation.
Mode of transportation. So I'm asking motivation. Okay. I will simplify that question. Ship is a motor vehicle or not?
Is it?
Motor vehicle.
No.
Helicopter. Is it a motor vehicle or not? So then we have some issue with the interpretation. Right? This is the one experience I had. So yeah. So how the court is interpret the issue or the fact? They first see whether there is an interpretation in the relevant act law. So what I want to highlight here. So in case of the income tax, we have separate section for section 195 which gives some interpretation. Right? We have to stop the using the Google. Right? You have to open your mind and explain, not the Google. Right? Okay. So if there is an interpretation in the law, so we have to use that. It is relevant of that. Say income tax. What is motor vehicle? If it is in the law, it is binding. If it is not the case, we have to refer any other relevant. That's how the court interprets the law. Right? Say higher purchase, it is not there in the relevant law. So then there is a separate act law. So we have to go with that. Right? If it is not the case, whether previous court has given some sort of interpretation, but in some case. So then we can apply that. Otherwise, we have to go with the general definition. So general definition is there in, yeah. It is in a dictionary. So you can check with Oxford what is motor vehicle. It says any vehicle which is using motor and goes on road. So then ship is not a motor vehicle. Right? Okay. So now what I want to highlight here, So you should have some sort of understanding, application, interpretation given in the law. It's a very important because there are so many technical jargon we are using, which is in the tax law. Say person. It is not the general definition what we are using for person. Year of assessment, taxable income, final return payment. So as I explained, there are two persons who is liable to Sri Lankan income tax, that is person has taxable income, then before tax on taxable income, tax on final return payment. That's the gross tax liability that somebody should liable in Sri Lanka. So I should say person liable in Sri Lanka. Right? So taxable income is calculated based on section 3 of that. The final return payment are defined in section 88. It's defined in section 80, final return payment. Right? The applicable tax rates are provided in the first schedule to that. That's another schedule. Right? That is the structure of the law. It says section, if you read here, give section number. Right? Give section number. Thereafter, we can go to the section or based on the chapter, and there are sub note here and title here. It's go with schedule. Refer to schedule. Right? There are schedules. So tax rates, they are in the first schedule. Right. So then, once we work out the taxable income as per section 3, we have to use the relevant rate, which is in schedule 1. Work out the tax rate. That is not taxable income. As well as withholding tax rate is also there. Some withholding tax they have recognized as final withholding. Right, as you mentioned, in case of the dividend payment, the company is declaring dividend out of their profit, they have to return tax at the rate of 14%. Section 88 says it is fine. If it is not stayed under the section 88, then it is not a final withholding payment. Right? Clear? Any question? Right. So the withholding mechanism. Right. This is a simple example. We do service. He is making the payment. As in a simple example, say I am working for a company. I am rendering my services to the employer. Employee is making payment. Rewards for the pay service. It could be monetary or not. Right. So for the tax purpose, for the withholding tax mechanism, we recognize he is as a withholding agent. Why? That particular person is holding tax on behalf of the government. Otherwise, we have to go to the bank and pay to the government. Tax, right? Collecting authority. But on behalf of the government, he is collecting tax. Therefore, we recognize that agent, what is withholding agent. He is withholding. So once he holds the tax, he cannot use that money. He cannot enjoy that money because it is not his part. So whose liability? Receiver's liability. But he did. He hold under his custody. He keep under his custody. Right? Thereafter, he has to pay to the government. Tax authority for the company general account or the treasurer. Right? So therefore, he is making that payment. It is his entitlement. So this is the withholding mechanism. Right? Withholding mechanism. As I mentioned, if you are working for a company or the underemployer, if you are getting more than 100,000 salary per month, it is mandatory for the employer to deduct tax. It is mandatory now. Let's say a company which is distributing profit as dividend, it is mandatory to the company to deduct tax. So by any case, any chance if he has not deducted, tax authority can collect that tax from agent. Right? Right? Right. So the interpretation. Person. Section 195. Person. Person means an individual or entity and includes a body of person, corporate or unincorporated, and etc. Non-governmental organization and charitable institution. This is coming under person. So, interestingly, in our tax law, we have inclusive and exclusive definition, interpretation. Inclusive means it says include this 1, 2, 3. Exclusive means it gave the definite interpretation. Right? As I mentioned in the Oxford Dictionary, says what is motor vehicle. That is the definition. And the term about the definition. Right? It covers the exact meaning of that. So if it is includes, it says includes the body of person. It says corporate and unincorporated and etc. non-government organization and charitable institution. This is the meaning of person. Right? So individual. Individual means who's individual? Individual. Yeah, just like us, who is born from mother. Right? Or the natural person. Individual. Right? So entity. Entity, they have given the definition. Entity. Entity means a company, partnership or trust. Entity means company, partnership or trust. Right? But exclude an individual. Why it is there? Separately identified. Therefore, it is exclude. Right? Then body of person. So then this one person is summarized an individual, an entity which is company, partnership, trust, a body of person, corporate or unincorporated, and etc. A non-government organization, a charitable institution. So that means these are the persons. So it doesn't mean that they are liable for tax, right? So in order to get them to get the liabilities, what they should have. So say charitable institution. So why charitable institution are there? What is the objective of why they are standing for? Do charitable activity. Means they are liable to tax on that? No. What that mean? If they have a taxable income, they have a taxable income, or receives final withholding payment, then they are liable. Right? Body of person. Example. Body of person. Example. No. Member of any society, club, sport club. No. No. So I'm not doing anything other than this. So body of person means the collective of just like say sport club, right? Committee, association, trade union. That is also body of person. It doesn't say need to be in a very formal way or incorporated. No, corporate or unincorporated. Corporate means maybe registered or may not be. Let's say we have a welfare society. So it's a body of corporate, body of person. It may be registered or not. If we have a taxable income, then it is subject to tax in Sri Lanka. That's the meaning. Right? Because if somebody not covered here, that means it is not covered under the section 2. Then they are not liable for tax in Sri Lanka. That's the intent. So you know that church or the Kovil or the temple basically coming under charitable institution. Right? If they have a taxable income, they have to pay tax. Right? They cannot exclude from paying taxes. Okay? Here. Body of person means a company, partnership, trust, or other body of person, whether home in Sri Lanka or elsewhere. Company means a corporation, unincorporated association, or other body of person. This is important because as the company's law, they have given definition for the company. But 11 law also interpret what is company. It says corporation, unincorporated association, or other body of person. That is coming under the company. And in our syllabus course, first thing is understanding the type of companies in Sri Lanka. Right, you know that type of companies, right? It could be single liability company. Anyway, they have to get the research, otherwise there is no legal person, right? That's the final. Right? So it may be private limited or public. Guaranteed. Right? Likewise. So, but for the tax point of view, company means a corporation, unincorporated association or other body of person is coming under the company. Right? Includes a friendly society, business society, pension funds, provident funds, retirement funds, superannuation funds, or similar funds or society. And a government, excluding the Sri Lanka government, a political subdivision of a government or public international organization, but exclude a partnership or trust. So we exclude a partnership trust because it's separately readdressed. Therefore, this is the definition for company. Right? The following shall be deemed to be a company. It says deemed to be a company. A partnership in which at least 20 of partners have limited liability for the debt of the partnership. Limited liability partner. Basically. Sri Lanka right now we don't have, right? So why then it is there in the law? Any do you have any idea about limited liability partnership? In Sri Lanka, but outside other countries we have. The UK, Canada, we have. Right? Limited liability partner. So difference between the company and the partnership is basic thing is liability of the members, right? In company, liability is limited to okay.
The investment.
Yeah, they are ownership. Or unsubscribed or subscribed. Subscribed, they don't have any liability. Unsubscribed, so they don't. But they have unsubscribed, they are liable for that. Say company is issuing shares at 100 rupees. I have paid 100 rupees. Thereafter, I don't have any liability. So if I have paid 50, then I have liability to pay 50 in any case company demand. Right? That's the legal liability. Right? So why this limited liability partnership is there? So actually in Sri Lanka right now we don't have, right? So why it is there? Actually this is not our law. That law is not drafted entirely from Sri Lanka. So this is the law introduced by not you. Not music. Even it is ratified by the Sri Lanka Parliament and we customize that law as per our requirement, but it is not entirely Sri Lanka law. That's why those type of things are there.
The combination of Ladakh.
No. It's a, yeah, you mean the hybrid? No. Actually, this law was introduced in 2000. They were introduced in 2017 to Sri Lanka to grant the loan which we have applied from IMF. And 75 million loan we have applied from IMF. So you know that once we go to the bank is asking, and when we are asking a financial question from bank is asking the way we have to repay for the capacity, whether we can pay. Right? So I mean, let's say if you are not having any income, whether bank coming and asking, they are helping like giving loan or whatever thing, credit card. No, you are earning money, then bank also coming. Right? So when we apply the loan, so IMF asked from our side, from Sri Lankan side, how you are going to pay that. So what's the only income in Sri Lankan government have? Tax. So we went with the previous law, which is Act number 2006, 10 of 2006. They told that with this act, you cannot achieve this revenue target. Therefore, you come with another, or you come with some sort of amendment or restructuring your tax system. We couldn't, then they have suggested, okay, we have a law which was introduced to Ghana, which is under American region, USA region. They have the limited liability part. So therefore, we also have now we shall have partnership in Ghana. Right. That's the real case. Because I was there in the IMF meeting at that time. Right. So a unit trust or mutual fund to which section 59 applies. That means if somebody, you have some sort of understanding unit trust or mutual fund, if they are not doing the their objective, not achieving their objective, they will treat it as company. Then they are liable for tax. What they are doing, basically unit trust is doing collecting funds and they go and invest. They collecting funds from the unit holders or the investors, and they are going and invest. And thereafter they are sharing that income to the unit holder. Right? If they are not doing or they do investment, not doing the investment in the way which is expected, then they will treat it as company and they are liable to tax. So what is the year of assessment? Is the period of 12 months. Important. Is the period of 12 months. Year of assessment always for 12 months. Commencing on the first day of April of any year. Commencing from the first day of April of any year. And ending on the 31st day of March in the immediately succeeding year. That is the word we are using in the law, especially tax law. Say succeeding and proceeding. So subsequent, which means next year, simply. Starting from the April of any year and ending with 31st March of next year. Year after that. So that 12-month period we call year of assessment. That 12-month period. Right? For example, the year from 1st April 23rd, 13 to 31st March 2024 is the year of assessment 2024. So taxable income. The taxable income shall be computed as follows. Taxable income from employment. We have already covered. Taxable income from business. Some extent we have covered. Taxable income from investment also covered. Taxable income from other sources. Other sources. We call total assessable income. From total assessable income, we can deduct only two items, which is coming under section 52. Fifth schedule says qualifying payment and relief we can deduct. Remember, once we work out the assessable income, we cannot eliminate any other thing other than these two. It says only qualifying payment and relief we can deduct. Any income we have taken to the assessable income, say employment income, it comes to the total assessable income. From that we can deduct only two items, qualifying payment and relief. Remember here, these both are just like exemption. Sorry, expenses. Qualifying payment, some payment which qualify for deduction. Right? Some payment which qualify for deduction we call qualifying payment. Or relief. Relief means some sort of exemption. Not really exemption, it's some sort of reduce the burden. Right? Relief. So only two things. So then you can say any income we cannot remove here. Then whatever income coming here is come to here. And thereafter we can deduct this type of index. Then it is taxable income. Then it's a matter of applying the tax rate and work out the tax liability. Right? Right. So the taxable income of each person and taxable income from each source shall be determined separately. It says taxable income of each person. We know that who is person. Each person we have to work out separately. Assessable income from each source. These are the source. Employment, business, investment or other. There are four sources. Four sources means for tax purpose they are recognizing only four avenues which generate income to person. First one is employment. Second thing is business. Third one is investment. The last one is others. Right? So this law says we have to go with the dominant principle. Right? Whatever income first we recognize, if it has the features of employment, then it should be worked out another employment. Right? Right? So if not, then we have to check whether it is coming under the business income. If not, whether it is coming under the investment income. If not, whether we can work out that income under the category of others or that. If it is not, then it is not part of taxable income. Right? But you know that this tax law doesn't give any relief. Right? In such a way, they have drafted to capture whatever income. Right? Okay. Then you should have some sort of understanding what is employment income. Right? What is employment income? Yes. So again, it should be. We put it in a good way, good word, that reward. What you are getting, rendering your service as employee. Okay. Simple example. You know the doctors, government doctors, there's some doctors they are going for channeling. What is employment? Consultation fee. Consultation fee. From where? He is getting consultant fee from the channeling center, right? And he is getting, I know that he is government employee. He is getting some benefit from government as well. Which is coming to the employment. Government salary only. Secondary income. No, I don't want a vague answer because now you know what are the source of income. In which category it comes? For the employee.
Government is the employment income.
Okay.
And the business, the consultation.
Yeah, correct. Correct. So yeah, because employment income we recognize as you explained, if you are having an employment contract, in the both scenario is rendering services, professional services. Right? So first one here, there is an employment contract. As I mentioned, he is government doctor, government dental. Right? Under the law, under the practice or the regulation, he cannot do another job, other employment. Right? Therefore, one employment contract. So under that he is rendering services, it's getting employment income. So other part is coming under the business. So by the definition is business, it says what is business and whatever income coming under that, it is coming under the business income. So therefore, in that scenario, we have to work out two things. So that's what I mentioned. So first we have to check the income, whether it has the attribute of employment, yes, it should be worked out under the employment income. If it is having some features of the business, yes, we have to work out under the business. So difference between that employment income and business income, right? There are some the points we have to consider. Based on that, we have to record. I'm not go that extent because I believe that you have that one, right? So, for the tax point of view, under the employment income, we cannot deduct any expenditure. But in case of the business income, we can deduct expenditure because we have to work out the profit and thereafter we have to work out the taxable income. Employment income, we are considering gross amount. This may be monetary, non-monetary. So, right? So, taxable income of a person for a year of customer from each source shall be based on such person's residential status. Other concept. For a resident person, tax the income from employment, business, investment, or other sources for the year wherever the source arises. That is important. Wherever the source arises. In case of the resident person. In case of the resident person, wherever the source arises, when we are working out taxable income, we have to consider both income. It says wherever. It doesn't say it's from India, come to any other country. It says wherever. It may be from other planet. If somebody is recognized as resident for Sri Lanka tax purpose, then when we work out taxable income, we have to consider. Remember, once we work out taxable income, it is come to the total taxable income, then we can deduct only two things. That is qualifying payment and relief. Thereafter, it is coming with taxable income. Then a matter of applying the tax rate and work out the tax rate, then you have to pay the tax. Right? So then it is very critical that to decide whether some person has the status of resident or not. So in case of the non-resident person, the income from employment, business, investment, or other source for the year to the extent that the income arises in or is derived from a source in Sri Lanka. In case of the non-resident person, is stated He is liable, his taxable income comprise to the extent that that particular income source should be in Sri Lanka. In Sri Lanka. Source in Sri Lanka. So means we know that there are four sources. There is employment, business, investment, and other. If that particular source in Sri Lanka, then when we work out the assessable income of an unresident person, we have to consider that. Right? Right? Any question? Question. Now we can see the next slide. Right. Question. Right. So what is the source in Sri Lanka? Source in Sri Lanka? Yeah, in whatever employment or category, no? Source in Sri Lanka means that income should generated from Sri Lanka. The employment shall exercise in Sri Lanka. Right? Shall exercise in Sri Lanka. Say, I am working from company. Right? Company is incorporated in India. But I am working in Sri Lanka. So, company paying salaries to my account, which is in a bank in India. Am I liable for tax in India? Am I liable for tax in Sri Lanka? Is that question clear? I am liable for tax in India. Sri Lanka. India. Which country I am liable for tax? India. India is out of India. Yeah. Sri Lanka. India. India. Sri Lanka. India. India. Sri Lanka. I am working. I am employee of one company which is incorporated in India. Right now, I am working in Sri Lanka. Right, my Indian company paying my salary is sent directly to the bank account, which is in a bank in India. In which country I am paying? I am liable to pay taxes. Sri Lanka. India. Yeah. So first thing, that's right. First thing you have to check where the source. Source. That's the source. If I working from.
Yeah, we are working from Sri Lanka.
Yeah.
We are using resources in Sri Lanka. Yeah, we should pay the tax.
Good justification. Yeah, because so thing is that employment is exercised in Sri Lanka. Employment is exercised in Sri Lanka. Therefore, as for this law, it says, where the you employment exercise, in that place, you have the source. Then it's Sri Lanka. Right? Second thing, we have to check. That's the question. First thing is, where is the source? There is a source in Sri Lanka. Second thing, in which country I am resident? Yeah, that's the thing. Then we have to check what the residence. Right? If I am a, so it is a tricky question. If I am a resident in Sri Lanka, and my source also in Sri Lanka, so in case of the resident person, we don't worry about where the source is. We say, if a resident person, wherever the source is liable for tax in Sri Lanka. I mean, when we are work out the taxable income, we have to consider that one. Wherever the source, where are you? In case of the non-resident, if I am non-resident for Sri Lanka tax, to the extent that source in Sri Lanka, that should be the correct answer. Right? There will be the source in Sri Lanka. But if I am a, but then the question should be whether you are a resident or non-resident. If I am a resident for Sri Lanka tax, then my assessable income, when we work out the assessable income, we are not bothering about where the source. If I am a non-resident for Sri Lanka tax, then we should consider income which has source in Sri Lanka. Right. Okay. That clear? So interesting part, other side. So I told that I am working for Indian company. Right? So the general, what the meaning of the other laws, it says resident or non-resident, or you know that dual citizen and all those things, that is not applicable for tax purposes. Tax purpose define who is resident and who is non-resident. Right? So why I explain that? You learn what is residency also, right? Right? So somebody could be resident for Sri Lanka tax. On the other side, he could be treated as non-resident for this country. Right? Say, if I am a resident, wherever the source, when we work out the assessable income, I have to consider. It could be income from this country. I am a resident person. If I am getting income from this country, I have to consider that when we work out the assessable income. So other side, I am a non-resident. In that particular country is liable for tax as a non-resident. Say India, just like India, right? From India side, I am a non-resident for India tax. So if I have a source in India, then I have to pay tax at India asset. Right? We call this is double taxation. Right? In this course, so my main target is this one because I know that other areas you may not completed and maybe thorough in that stage. Right? So there is a mechanism called double tax evidence, and also there are form of double taxation. So one concept is economic double taxation. So what you told that when the company is declaring dividend, they have to deduct tax at the declaration. So remember that company is declaring dividend out of the profit, which profit they are declaring dividend. After that means they have already paid tax. Thereafter they are deducting tax again. It is also double tax. We call economic double tax. Right? So however, for the moment, if a resident person, we have to consider the income. We are not bothering about where is the source. In case of the non-resident, so then we have to check where the source. In case for Sri Lankan tax purpose, if non-resident having a source in Sri Lanka, then when we work on the super income, we have to consider that income. Right? Clear? So then residency status. So actually, this is not in this level, but I am again explaining. So an individual shall be resident in Sri Lanka for a year of placement if he resides in Sri Lanka. So unfortunately, I told us this he, no she. I told us this that even now Commissioner General is a lady, but it still be called for tax purpose he. That is as per the law, right? So if we reside in Sri Lanka, that means they have all the interest in Sri Lanka and he live in Sri Lanka. He is present in Sri Lanka during the year and that presence falls within a period or periods amounting in aggregate to 183 days or more in any 12 months period that commences or ends during the year. Right? This is very important. Right? Is there, if he is present, this is individual, right? Natural person. If he is present in Sri Lanka during the year and that presence falls within a period or periods amounting in aggregate to 183 days or more in any 12 months period that commences or ends during the year. Right? Simply say, if somebody physically present in Sri Lanka more than 183 days for any 12 months period, commences or ends during the year. So that particular person need to be treated as a resident person for Sri Lanka. This is basically applicable to a person or individual who came to Sri Lanka or who going out of Sri Lanka. Right? Then if any person or any individual who is not in Sri Lanka or is not a citizen of Sri Lanka, he comes to Sri Lanka and he physically present in Sri Lanka more than 183 days, it says for any 12 months period. Right? Then he shall be treated as resident person for Sri Lanka. Right? Right? These things are happen. Here is the point. You know, country got shut down for 3 months. Some countries ban travel, impose ban travel restrictions. So they were there in Sri Lanka. They were staying in Sri Lanka. Physically present in Sri Lanka more than 100. 168 means how many months? Roughly 6 months. Right? So become Sri Lanka resident automatically. So do we need to apply for the visa or whatever thing or the citizenship or dual citizen? Not applicable for tax code. Somebody physically present in Sri Lanka more than 103 days or more in any 12 month period during the year. He shall be treated as a resident person for Sri Lanka tax. So other one is for applicable to only for government employees, or an official of the government of Sri Lanka and his spouse is posted abroad during the year. That is only applicable to government employee or official who posted. That means on behalf of government, they are not in Sri Lanka, they are outside Sri Lanka, but still we have to consider they are resident person for Sri Lanka. Right? So then these two rules is not applicable. That is special because it is special thing. Say you know that high commissioners and all those things they have their office outside Sri Lanka, but they are representing Sri Lankan government. That unfortunately their rule is not applicable. Still we are considering they are resident for tax purpose. Is an individual who is employed on a Sri Lanka ship within the meaning of merchant shipping act during the period the individual is so employed. So any ship which is registered on Sri Lanka merchant shipping act and any employee during for the period of employment, he shall be treated as resident person for Sri Lanka. Right? So it only says these things, but somebody is in the space, not recognized. Change in residence, section 7.1. An individual who is resident in Sri Lanka only by reason of para B, that para B means section 69.1, para B is there. Only that reason can be so resident for the start of 103 days period. Otherwise, a person who is resident in Sri Lanka during a year of that month can be treated as a resident for the whole of the year. Right? This concept we are discussing in detail again when we are discussing the double tax evidence agreement. So that's what that's the main objective why I discussed here. I know that you may have heard or me learn this concept thing. That is individual. Then partnership. Partnership shall be resident in Sri Lanka for a year of assessment. If it was formed in Sri Lanka, the partnership is formed in Sri Lanka, then it shall be treated as resident partnership for tax purpose. At any time during the year, the management and control of the affairs of the partnership are exercised in Sri Lanka. If it is the case, that partnership also treated as resident partnership for tax. Then trust. A trust shall be resident in Sri Lanka for a year of assessment if it was established in Sri Lanka. At any time during the year, a trustee of the trust is resident in Sri Lanka. At any time during the year, a person resident in Sri Lanka directs or may direct senior managerial decision of the trust. The direction is made along or jointly with other person or directly or through one or more interposed entities. Right? That is belong to trust. If the trust established in Sri Lanka, it leads a resident transport act. If at any time during the year, a trustee of the trust is resident in Sri Lanka, trust has two parties. You may have that trustees and beneficiaries. And if the trustees are resident in Sri Lanka, then it shall be resident trust. Another thing is senior managerial decision is taken by a person who is in Sri Lanka, even within or the interposed entities of person. That first shall be treated as resident trust for tax purposes. In case of the company, a company shall be resident in Sri Lanka for the year of assessment if it is incorporated or formed under the law of Sri Lanka. So this is very important. Why our next discussion is only depend on the taxation of companies. Corporate taxation is the subject, right? So therefore, I am focusing only on corporate taxation. Right? So when we work out the tax slab of the company, then first we have to decide whether it is a resident company or non-resident company. So then, how to decide the residency of the company? If it is incorporated or formed under the law of Sri Lanka, it not necessarily be under the company law, company act. Right? 7 of 2007, not the case. Any law. Company can be formed under the special act passed by the parliament. Right? In the law of Sri Lanka. It's registered to principal office in Sri Lanka. So normally, if it is incorporated in Sri Lanka, as per the company law, we have to give the registered office address. So then definitely registered office should be Sri Lanka. Or principal office in Sri Lanka. Or at any time during the year, the management and control of its affairs of the company are exercised in Sri Lanka. The management and control of its affairs exercised in Sri Lanka, then it shall be treated as resident company for Sri Lanka tax law. So then non-resident company. A company deemed to be non-resident in the following circumstances. Company registered office or principal office is in outside Sri Lanka and the management and control of its business is exercised outside Sri Lanka. So the other than incorporate, not incorporate Sri Lanka. If it is incorporated under the law of Sri Lanka, definitely it's a non-resident resident company. Sorry, resident company. We are not bothering about they do business. Right? If it is incorporated in Sri Lanka and they do business outside Sri Lanka, even it is the case, if incorporated in Sri Lanka, it shall be treated as resident company for Sri Lanka tax. Right? Okay? So this is very important for our discussion. Right? Our main discussion is computation of tax liability of company. So assessable income. The assessable income company for a year of investment is the aggregate of bulk income. Assessable income from is the assessable income from investment, assessable income from any other source. So you know there are 4 sources: employment, business, investment, and other. So it's very rare chance the company have a employment income. It can have employment income because company has a separate legal ownership. Legal personality. Separate legal personality. Therefore, company can be appointed as a director of another company. Even directors are treated as employees. So if the company is getting director base, it can be treated as employment income. But in our discussion, I am focused on these 2. Even though there is all other source of income, any other source is very rare chance. That's what you have a doubt about whether you learn that one. It may be the case. Because once we go with the dominance principle, at this level, everything is covered in normal account. And therefore, very rare chance to have other source of income. Guys. So, assessable income from business. What is this? Sorry?
It takes more break.
Let's say 10 minutes, 3 hours, right? Then you have another order. More break. Really? I'm trying to do the continue the lecture till 11. Right? I have installed break. No? Go with the majority rule. Right or no? Right, okay, 15 minutes.
Excuse me, sir. Excuse me, sir.
Yes.
Sir, can you hear me? Yeah.
I can hear you.
Sir, if you mind, can you use the rather than using the whiteboard, can you use the digital board, sir? I mean, because we can't see as the online students, we can't see which you are writing on the whiteboard. We can't see actually.
Not much actually, so just a diagram I mentioned there to train the veteran and understand the same
Yeah.
thing. Yeah.
Okay, sir. And when you are moving out to the classroom, the sound is echoing, sir. Like if you try to stay near to the camera area, we can hear you properly, sir.
Okay. Okay.
Yeah. Thank you. Thank you very much, sir.
Whiteboard. Arya. Oh, honey. Nice. Whiteboard use kan. Oh, अरे मंडी जो बोटी यूज कर रही है मामा में बाइक बोर्ड में यूज करना है देखो ट्राई यूज करो ठीक है मन यूज करो
That's seriously? Yeah, you are fine. How do I?
So, in terms of which we are discussing on the in this point is business income. Again, that section 195 says what is business income. The interpretation given under section 195. So it says it includes inclusive definition include a trade, provision, vocation, no isolated arrangement. Okay, profession or vocation. So in the example where I told that the doctor is getting remuneration from government as well as he is getting standing income. So profession, vocation or isolated arrangement. Says isolated arrangement is a business character. It could be isolated arrangement. That means one single transaction, right? Single transaction. But if it has business character, we are not bothering about the time period. It is also treated as business income, right? Where profession, vocation, no isolated arrangement with a business character, however shorter the duration of the arrangement, right? We are not bothering about the time period where that transaction happened. Even it could be a one transaction. And if it has business character, it is treated as business income, right? A past, present, or prospective business. So it could be past business. Present means is current business, even prospective business, right? But exclude that employment. Why? Employment is separate source of income for tax purpose. That's all. First we check whatever income, what they are receiving, whether it is coming under the employment income, yeah, that character is there, then we have to recognize under the employment income. If not, then we have to check whether it has that business character. And that business character we have to recognize under the business income. We are bothering about the time period if the transaction happens. It could be done. Ongoing. Not necessarily be. Right? So, I will say in one so the thing is that the court has decided that transaction is business. So you may heard that even Mahavitarana case and Rameshwara case. So only one transaction that particular person has done. So the burdens of land and the name of the land. Right? Court has decided here. Intention behind the entering into the agreement at that time. Higher intention is to resell. So with other facts they have considered. So therefore they go decide that it is the nature of the trade. So therefore it should be said. So one prospect. Past business means the particular person has done that business previously. Income is right now right? And it is also treated as business income. So person income, person business, you may have. Prospective business means say future business. Right now income is generating. Right? Still we have for the tax point of view, we have to recognize under the say we are going to sign a contract to do some business. Right now we are getting income. And eventually whatever thing happening we are in subsequent. For the tax point of view, it should be treated as prospective business. So it need to be worked out under the business income. If these characters are there. If any activity amounts to a business, it cannot also be an investment. This is the incorporation of the dominant principle in the question of that. One is dominant over the other. Yes, a person is just passively holding asset. In that case, he has an investment rather from a business. Accordingly, it is very important to understand what constitutes a business. What is business? An income that a person might derive from an asset without activity, without active engagement. So we call passive income. Engagement it is considered as investment income. So we don't have any active activities, much activities, so we are not much involving to generate that income, then it is more likely falls under the investment income. So you know that say we can deposit money in the bank, right? Bank is paying interest. We need not worry about day by day whether bank is work out the interest, bank is but the depositing money to reinvest that interest into my account. And it is happening. Right? Our effort to generate that income is very minimal. But not in case the say I am running a grocery shop. So from the morning to evening, I have to engage with them. My effort is much more than higher than once I put money into the bank. So the bank inside, what is that? Bank also has the interest income and interest expenditure, right? Bank taking money from that and they are from our side, it is interest by there is so much effort to generate that income. Right? For the banking side, they have to check what the lending rate, how it could be in future, how we could get the parity benefit, and all those things they have to consider. They have to work on that. Therefore, the banking side, even its interest, mode of payment is interest. But for the banking side, it is part of business. They do business. So even person is lending money. So that person in village also there are some person they are lending money. That is part of business. They do as a business. Because they are taking the risk of that. Right? However, if an amount is derived in the context of the business, which is effectively connected with the business, it is treated as business income, irrespective of whether it is mentioned in section 7, which explain as the investment income. If any income which is effectively connected to the business, we are considering as business. So when we work on the business income under section 6, these things need to be considered as part of it. In calculating business gains and profit from conducting a business, the following shall be included. This is as follows. Both ways. These things need to be definitely service business engage the rendering services. Consideration received in respect of trading is low. Exactly. Consideration received in respect of trading is low. What they are getting for the trading is low. That. So it says we have a trading stock. If anything gets received from the trading stock, what do you mean in terms of the finance? This is a theory of the structural says consideration returning respect of trading. Gain from the realization of debt and liability. The realization asset and settlement of liability. It is also part of business income. There business income. Business. Realization of business asset as well as settlement of business liability. It shall be part of business income. Realization of depreciable assets of the business. Depreciable asset, realization or selling of depreciable assets, that is also part of business income. Consideration for accepting a restriction of business capacity. Sometimes the person may receive some money amount for agreeing not to do a business. This is also treated as part of business income. The example, say I am running a distribution business. Right? I sell some item within a particular area. Okay. So somebody is coming and telling me, don't sell in this area. I am also doing that business. So I will pay for you. Then what I can do, I can work out the future cash flow. So this is the expected amount what I am going to earn from this business in next 5 years or 10 years or whatever thing. So if it is paid by that particular person, I'm okay. I can accept that. But thereafter I am not doing that business in that particular area. Right? So that type of income also we have considered as business income. Right? That is that's a sheet. May receive some amount to agree not to do business. That is also that need to be included when we work out the business income as part of the business. Right? Gift received in respect of business. Gift received in respect of business. That is also connected to the business. This should be considered as a part of business income. However, if the gift is kind of a trading stock, depreciable, so business asset, then it have a cost equal to the amount included in the income. Right? Amounts derived that are effectively connected with the business and that would otherwise be included in calculating the further income from an investment. If it is effectively connected with the business, even investment income can also be part of business income. Right? Simple example. Say I'm running the business, I need a financial facility. So I have a deposit in a bank. I keep the Say I need to open a interesting if the return of investment is less, then it's better to put as a bank deposit and get it at least to cover the opportunity cost. Then I can take out that money from the business and keep in the bank. So my whole purpose is not the putting the money in the bank and earning interest income. When I'm running a business, if I don't have the return of income, then I can put that money separately to bank account and get the income. So that point of view, that money is not used for the business, therefore it is part of investment. Right? However, as I mentioned, I keep that as security and obtain a loan. The loan is I'm using for the business. Then that particular interest also is part of business income, not as part of investment. Why? Now it is effectively connected with the business. Okay, that is the intention here, that what is effectively connected with the business. So therefore, we have to clearly analyze some income source. Yes, it is coming under the investment income. That could be chance to that income also recognized under the business income because of that investment is effectively connected with the business. If it is the case, that income need to be considered, the component need to be considered under the business. Right? Other amount required to be included under the act, but exclude XM amount and final withholding. So XM amount and final withholding amount we are taking out. Remember, we are going to work out the assessable income from business. Assessable income from business we are going to work out. Right? So I told you, assessable income from business. If you work out that thing, it is directly go to the total assessable income. We can deduct only two items, which is under section 52. What is that? Qualifying payment and relief. So at that point, we can deduct amount and final withholding. Therefore, when we work out assessable income, if any XM amount or final withholding amount, we have to take out. Yeah, XM amount we have to work out separately, and we have to take out when we work out the assessable income from a source, from particular source. Right? So then why we are removing withholding pay? What is the reason? I mean, that's in the financial statement. The financial statement, not only the details of the financial statement or the income we are recognized under the financial statement, right? We don't know whether it is investment income or whatever it is. Dividend income also there, interest income also there, realization of the sales is there, right? We are taking the net profit, right? So that's it. Here it says XM amount we have to take it out. That's okay, that's fine, right? So why then it says final withholding payment also we have to when we work out this business income. Right? So I told that in the charging section it says person who liable for Srilanka income tax is person who having taxable income or receives final withholding payment. Right, now I am telling here when we work out this business income, we have to take now final withholding payment. Why? Other reason. That is. Right. Reason is that we are working out here. What is accessible income? We are working out here accessible income. I told you accessible income. Once we work out accessible income, we remove the qualified payment and relief, then taxable income. Right? I told you under the section 2, it says person who is having a taxable income. Oh, who is receive final withholding payment. Final withholding payment is liable for Sri Lanka income. In the section 2, separately address the receives the final withholding payment. Therefore, it means we have to take out from here. It should be considered under the final withholding payment. Here we have worked out accessible income. Thereafter, we have worked out the taxable income. But intention here is to work out the taxable income. So final withholding receipt, subject to any payment, which is withholding tax, and treated as final withholding, we have separately work. Right? Yeah. Clear? No. Okay. So therefore, exempt amount, of course, if it is not liable, anyway, we have taken out, right? But at the point of where we work out the taxable income, we taken out the exempt amount, and also final withholding amount we are taken out. Why? Intention here is to work out the taxable income. Before we work out the taxable income, we have to work out the accessible income. Right. The term rate is not defining that. Therefore, in order to decide whether there is a any rate or not, we must see we must see these things. Whether the person has purchased some quantities of items which are more than a commercial good, which is far excessive of his private usage, then there is a clue that why he has purchased that. There's an example, like not an example, case law decision. In that scenario, what was happened? Somebody has purchased toilet paper from a company. That company is manufacturing toilet paper. Company is going to liquidate. That person got to know that they are going to, the company is going to sell their toilet paper at a discounted price. He has purchased all stock and keeping it custody subsequently also. Another profit. Right? Normally, toilet paper is used for domestic purpose. Right? But from this transaction, he has earned a profit. So he has mentioned that I purchased toilet paper. So for my private amount I have already said. So therefore, this cannot be treated as trade. But the court is still knows but the amount he has purchased is not for his private requirement. It is excessive is of his requirement. Therefore, at the time when he purchased, there was intent of resale of the, then there is a character of trade. Then it should be part of trade. Trade stock, then it is liable for tax under the business income. Right? So that where a person has purchased some commercial quantities of items which are more than enough for him. That is exclusive of his private usage. If it is the case, then it shall be treated as part of business. Right? That is correct. So in the Rameshwara case law also, yeah, well, I agreed to purchase a block of land which is called which is nearby school. Right? Ladies school. Reason he wants to send his two daughters to the very easy to find out a school where within some particular distance, right? 1 kilometer, 2 kilometers. Yeah. But the land, we are agreed for the land within adjoining the school. Right? But he doesn't have the no financial capacity. He agreed to place a deposit and he blocked the land for the entrance road and draining he advertised that there's a land which is going to be set. From that transaction thereafter, he sells a part of land and a part of again he has handed over the owner. From that disposal, he earned a profit and he didn't declare the business. Right? At that point, it came to the court. Court emphasized that when he entered into the agreement, he has to purchase that land, he doesn't have financial capacity. In most cases, if you are going to purchase any asset for the private usage, we should have financial capacity to hold the asset. Say, I want to purchase land. I may not have the money, but I can negotiate with the bank or the financial provider to finance that particular asset. I should be able to repay the loan. If it is the case, so I can easily say that it is for my private usage. Right? That particular land, he doesn't have the financial capacity, neither he cannot get that financial support from any other, rather finding prospective buyers, and from that he finances it. And interesting thing there was he had prepared the land for resale. Look into set up from trading system, everything. And also he had canvassed that he is going to sell that land. That it is not for his private usage. He's going into the agreement. He has the intention of reselling the land. Factors consider that financial capacity, activities, preparatory activities done for the resale of the land. This thing court has considered and court decided that it shall be part of this. Right? Right. That is Srilanka case. If such articles are held for a shorter period, articles are held for a short period, not the holding period. So as I mentioned, that there are two cases, he hold for a shorter period. That the speculation idea is there. In the market, he know that. He got to know that he can earn profit. Therefore, the holding period of the asset is very short. Yeah, in private assets, the holding period is not short period. Say we are going to purchase the land to set up a house. It could be some considerable period, not 1 month, 2 months, right? So then, if such articles are held for a shorter period, then it is also one factor that need to be considered when we deciding whether it is business or not. Right? So other thing is, transactions are repetitive. the chances to repeat that same transaction or the recurrence. So you know that in business, transactions are recurring. Day to day they are selling, they are purchasing. That's a process happening on a daily basis. Or within a time period. They 6 months who work to sort the great the dispute between two parties. He ignored that thing and he settled that thing. From that settlement, he got some fee. That's the only transaction he did for that particular period. And after he didn't do any that type of activity. Just like but the middleman, right? Independent middleman, he ignored that thing and settled the dispute. On the both parties, he got some income. So one definitely from one party, he got some income. And he didn't declare that income as taxable. Why? That's the only transaction he did for a particular period. Thereafter, he has not engaged some activity. But court decided, in Sri Lanka case, court decided that, yes, he may not enter another transaction, other activity in similar kind, but there is a chance for him to do that type of activity. Whether he engaged or not, that is something else. But there is a chance, there is a opportunity for him to do other transactions and getting some income. Right? Therefore, it is also liable for tax. Right? That is the repetitive nature. There should be some sort of recurrence nature. Right? Anything has been done to have a saleable item. That's what I mentioned. That land, in the land case, so what he has done, he made the land for saleable item. He looked into the plot and made entrance road, right? And set up drainage system, so saleable item. Any such motivation to make profit, this is very important. About the business activity, intention is what? Earning profit. Earning profit. This is very important. When we design the ideas business or so we have to check what is the motive. If the motive is earning profit, especially we call it speculation. We see the market gap and we know the opportunity, and right now we are buying and keeping as a and some frequent we are selling. Right? So motive is earning profit. So if it is the case, it shall be treated as business income. Okay. So then these factors need to be considered when we deciding whether this is business or trade. In a first example, in the doctor case, I told you that the channeling income is coming under the profession. So because profession is defined right. So now, so it can be determined that there is a trade. This is trade, right? Trade. Then, in order to arrive at the accessible income, this is incurred in the process of production of income. So that's what I mentioned. That in employment income it doesn't make any deduction, but in the business income category, incurred for the product arrived at the tax purpose. Accessible income is computed as follows. Right? So we use the net profit before tax. This as the financial statement, and this is the financial statement prepared as per the general acceptable accounting principle or the accounting standard. We are accepting. We consider the profit before tax, and then we do adjustment cash flow that we arrive at accessory compromise. So any disallowable item we have got back. So allowable item we can deduct. Right? We are using this type of format to work out the adjusted business profit that for income from business. Right? So we directly use the net profit before tax. There we right? Unless otherwise, when the time of inclusion of deduction is calculating further income shall be made according to the general acceptance accounting principle. So, general acceptance accounting principle, section 195 says those that are performed tax crime by Srilanka. As the international IFRS, international financial reporting standard. Income from business. An individual or entity conducting business shall account for income tax purpose on an accrual based business income. We have work out on accrual basis. You know, in the financial statement also we use the accrual basis. But remember, under the employment income recognized on this basis. In basis. Cash basis. Right? Cash basis. But business income shall be on so actually, even though it says double, some areas, some para says it's a double part. And definitely section 10, it goes that general reduction under the law. And the law section 10 is general reduction, but it says this is a double expenditure. Section 10 is about the expenditure which cannot be deducted when we work out the it's a general section. It says main deduction. Right. It says all to the extent they are incurred during the year. We are incurred during the year in the production of income from the business is allowable to deduct when ascertaining the income from business. The same section, there are two. The subsection 2 says no deduction is allowed for an expenses of capital nature. Even if it is income for the production of income, if it is capital nature, we cannot deduct. Right? And also, any expenditure which incurred during the year, but not connected to the general earning profit, then it is also not allowed. So this section generally says what is expenditure incurred for the production of income during the year can be done. Okay. Clear? So any expenditure which is not allowed for a particular year of employment, as well as if it is not incurred to generate the income, even it is in the financial statement as expenditure, we cannot do that. Right? Here, simple example. The financial statement. Give me example. It is there in the expenditure, but not relevant to particular year. We have already utilized that. Say example says electricity. We have utilized. Definitely there is a liability to pay, but we don't know what the accurate amount. We know estimate, not the accurate amount. Therefore, we put down the accurate. So then it is incurred for the year. Prepaid, of course, not coming to the financial statement, right? When we work out the profit, we are considering as expenditure. When we show under the and then any expenditure which is around previous year. Right now we have paid. Say we agree to pay we agree to pay some service fee, right? For the previous year, there was some sort of legal action or whatever then going on. Thereafter, they claim some expenditure. Then it is around previous year, not that this. So we cannot be done. So it should be particular year, right? As well as some expenditure which are financial statement, but not necessary to not necessarily incur that expenditure on profit. Example. Have you seen financial statement first? What is it? It is not to incur that expense. I mean, it is not necessarily to incur to run the business. But I know that it is there in the financial statement. Give me an example. They can see me, therefore I can't work. The guy is a bad year, I can't pick up in one place and leave the section. Even in a percentage, I want to eat some group. So these days, it could be there in the financial state, especially in this season, result, whatever. The example is donation. Donation. Do we need to do donation to do business? Not necessary, right? But if we made some donation, definitely we have to talk in the financial statement, right? Another that we declare it should be expenditure. But as per tax law, not necessarily incurred to generate the profit. Right? Therefore, we have donation, CSR expenditure. Right? Not necessary. Same section, the same section 11 says that anyway, we cannot deduct capital nature expenditure. There is a definition for the capital nature expenditure. What is capital nature? No deduction is allowed for expenses of capital nature. So definitely capital nature expenditure we cannot deduct. Capital nature includes an expenses that secure benefits capable of lasting longer than 12 months. Any expenditure, the benefit coming more than 12 months, it is treated as capital nature expenditure. Under this one, it says all expenses to the extent they are incurred during the year in the production of income. The production of income. Say we are setting a plan to manufacture some article. So all expenditure. As for this section, section 11, even the capital expenditure also can be deducted, right? Then we purchase machinery, but production of income, we can deduct. But that's why it says the paragraph, the subsection 2 says capital expenditure, right? Right? So what the definition for the capital expenditure? It includes an expenses that secure benefits capable of lasting longer than 12 months. That means we are assuming that it is 12 months period. So then that type of expenditure is treated as capital expenditure. Under section 11, it is disallowed. Example. And I mentioned that purchase of capital assets. Yes. A good example. So how about advertisement expenditure? Then we are going to start the advertisement expenditure of our advertisement expenditure in financial statement. Selling and distribution. So once we made that advertisement expenditure, can you tell that whether that particular advertisement expenditure income generate income for particular year only? So as per this section, advertisement expenditure also could be categorized under the capitalized expenditure. It says that any expenditure which secure benefit more than 12 months period. But separate is this. It is not the case. Section 29 deduction, especially deduction also some section deals with disallowable part as well. Related to certain specific expenses which will override the main deduction rule. So main deduction rule is section 11. Deduction rule is section 10. So the most powerful section is section 10. This is the superior. This is the section. It says, at any case, you cannot deduct expenditure which is coming under section 10. Right? Section 11 talks about expenditure to the extent that if it is incurred in the production of income during the year, but not capital nature, just deduct, can be done. 12 to 19 says this expenditure we can come. These two parts, 12 to 19 and the section 10 are most powerful section compared to section 11. Right? It's discussed sometimes extensive of the section 12, 11, but they have the right. Section 10. So no deduction shall be made in calculating the person income from employment. Right? Under the employment, when we work out the employment income, we cannot deduct any expenditure. You may learn that, right? Example, so you know that when you say you got an employment of the job opportunity from another company, you have to travel there, right? Say you have to get good dress codes, must prepare for that thing. So then they are you incurring to earn that money? Even for tax purpose, no deduction shall be allowed for expense. Section 10(1)(b) calculate income from any source, following income not allowed. These expenditure cannot be done at any time. So, first one is domestic expenditure. Right? Domestic expenditure. There is a definition for that. 2 tax payable under the 11 Act. Right? And that's for other levels specified the concerned gender. Interest, penalties, and fine payable for breach of any written law in any country. Right? Breach of any written law in the country should be done. Interest, penalties, and fine payable for breach of any written law. Say we are in a hotel. That was the case which was taken by the environmental authority that we have disposed some sort of wastage which is harm to the environment. They have charges. So, but in the financial statement, we have to record that because it is expenditure. Right? So, that purpose is there interest, penalties, and fine. It is a mode of interest, fine, or the penalty, which is paid in the breach of any written law. Breach of any written law. Right? It cannot be deducted. You know that say That's when we have our delivery network, our vehicle running on the road. You know that driver, he put the on the pedestrian deposit. So police has stopped the vehicle, and he is going to give a charge loan. But you know that in Srilankan context, we can negotiate with the policeman and we can settle. We have to pay something. He has paid that thing and he is coming with that thing. Okay, this was happened and he didn't give a charge note, but we make a payment. If we are in the financial state, we are recorded, right? We have breached law, but we have not paid anything to the in terms of the fine, penalty, or interest. Can we deduct that expenditure? Right. Right. Is it under this? It is not under this. It is under the section 11, not incurred in the production. Not incurred in the production. Right? Right. Expenditure or any other deduction incurred in deriving, exempt or final withholding amount. Any expenditure which have incurred for the earning exempt income or final withholding amount. So exempt amount, anyway income we are taking from, because here what the intention is to work out the acceptable income. So exempt income we are taking out. Apparently, particular expenditure which is related to the exempt income, we should take out. Also, final withholding amount also we are taking out when we work out the acceptable income. Therefore, if any expenditure related to the earning of final withholding amount, we have to take out. It is not allowed to deduct when we work out the acceptable income. Retirement contribution by the employer. If the benefit is that on the employer or contribution to the fund approved by the Commission General, such contribution are allowed. So otherwise, it is not allowed. Right? That means if the fund is not approved by the Commission General or the particular income is not recognized under the employee plan, we are not considering a deductible expenditure. It is allowed. Dividend of the company. It is part of, normally dividend is not coming under the, when we work out the profit before tax, it is, we are not recording dividend as expenditure. It is coming under the statement. Changes in equity. Right? So, but for the wind up company, it is part of a payment to the shareholder. Even if it is payment to the shareholder, we cannot do that. Outlay of expenses for entertainment. Simple say, entertainment expenses we cannot do that. Reserve or provision for expenditure or loss not yet incurred but expected to be incurred in the future years of practice. Right? Part to the make reserve or provision. Provisions are not allowed. Example, provisions. Added provision. Good. Other depreciation. Yes. Right. So expenses incurred on lottery, betting or gambling unless it is in the course of conducting such as business. Right? So that is also not allowed. Taxes or other levies issued by the Commission General and any taxes or levy which is not allowed to be deducted in calculating the person income in terms of any other written law. Right? So section 10(2), where a person is allowed a deduction for payment from which the person is required to withhold tax under the division 2 of the chapter A, the deduction shall not be allowed until the tax itself has been paid to the commission agenda. So I told you that the payer point is subject to deduct withholding tax if it is subject to withholding tax. Right? If the particular payer is side, it is expenditure. Right? If he has failed to deduct withholding tax, he cannot deduct the entire expenditure when we arrive at assessable income from business or investment. Right? The example as I mentioned, so when I am making the employment declaration as an employer, so from my side, I am running a business. The particular expenditure incurred to generate the profit. Right? If I fail to deduct withholding that, the entire expenditure I cannot deduct. That is different. Right? Okay. Right. Shall I stop there? Any question? No question.